Hello, my name is Lisa Skinner, and I'm the managing partner of Digital Financial. We are a boutique consultancy that specializes in helping regulators, governments, financial institutions, and development organizations make the most out of digital transformation. We work hand in hand in a collaborative manner with our clients to help them drive financial inclusion and better services for their customers. I am very, very honored to be having this event with the Caribbean Confederation of Credit Unions, and I thank Denise Garfield and her entire team, particularly Tahara Isaac, for making it happen. Thank you all for waiting, and without further ado, I am going to ask our panel to put up our first video, and I will quickly introduce the people that you will be speaking with today. So today we're going to start with a brief presentation on the basics of digital strategy, as have been learned by Matt Zufelt and Jeremy Green, two gentlemen who bring business and technology specialties to work hand in hand for digital transformation for financial institutions. And both Matt and Jeremy have had extensive experience within the region, in the Caribbean itself, various islands at a regional level, and also in Central America. So Matt and Jeremy will be your two leaders for the event today. Next slide, please, Matt. After their presentation, we'd like to have a roundtable and question and answer. So as we're going along, please put your questions in the chat. We're really looking forward to being able to interact with the members of the credit unions. And on our panel, we have Diego Rivera, who is a customer experience expert. He is particularly adept at dealing with user design so that your digital applications are seamless and friendly to your members. And we have two veterans of the Caribbean financial services environment, Robert Frederick and Earl Gill. Both have worked on the ground in numerous islands, and I am certain are very well known to both the executive and the members of the Caribbean Credit Union. One of the things that I'd like to bring to attention is over the course of their time working in financial services in the Caribbean, Robert and Earl have seen the whole effect of digital transformation from the very beginning to where it is now. And they've dealt in their organization with the fear of change, with the need to reorganize, with how do you make sure that technology does not take away from your close contact with your members. So I think that Robert and Earl will bring a totally different and customer focused on the ground experience to this discussion. And with that, I would like to say, Matt and Jeremy, would you take it away?
Thank you, Lisa. Appreciate the introduction. So again, I'm Jeremy Green, along with my partner in crime, Matt Zufelt. What I just want to make clear, so Matt and I will be co-presenting today. We'll be back and forth between various slides, seamless handoff. Matt's background, if you haven't figured out already, is more technically inclined, and mine is more business inclined. But what's important here is you'll see the cooperation between business and technology, which is one of the key things that we'll be picking up on success within the digital transformation and strategy. Between the two of us, again, quick highlight, 40 years of digital experience across 4 continents. So without ado, I'm going to jump into the presentation. Thank you, Matt. Very high level, what's important here is we're going to cover digital strategy today, how to create a digital strategy, and we're going to be focusing on the high level framework. So I'm not going to pick up on every word in every slide. That's not the intent. I would be very happy if you grasp the big tenets of the strategic approach, and if you sort of went away understanding what those main 6 components are, then you've gotten what we're trying to communicate. Very high level, it's very critical that a digital strategy can be for a small, medium, or large effort and financial institution, and we'll talk about that. We're going to cover the very critical 6 steps to go through to get to a digital strategy. we're going to walk you through each step and see how they fit together at the end. And one of the final steps you'll see is a digital roadmap and why it's very critical for success. As we take you through these 6 steps today, we're going to introduce you to a couple new tools or areas. One will be called a digital initiative scorecard, and the other something called the business model canvas. At a very high level, what you see is a digital strategy looks like any other strategy for steps 1 and 2, but it tends to differ in steps 3, 4, 5, and 6. And that's important for you to understand. At the end today, Lisa will moderate a panel discussion to answer your questions that you may take or have on the way through. And just before I leave this page, a couple high-level successes in digital strategy within your region. Mexico, believe it or not, is a very interesting case study, largely led by the government and their 4 regulators, but they have had phenomenal success in digital transformation. Jamaica, we've seen recently with COVID coming in, has moved quickly to digital COVID account openings, again, local successes. But you could even come back into our local environment here. I'm based in Toronto, Canada. The co-ops within Canada, which there are hundreds, have been working together in a shared services environment for over 15 years. So there's some great success models around and to learn from those. So next slide, Matt.
Okay, well, thank you for the introduction, Jeremy. My name is Matt Zufelt, and just what we're covering today is what really is a digital strategy, and it's a communication document for all levels of the organization that really articulates the where you're going and how your digital transformation is going to maximize your business and member benefits. Also, the technology focus required for that success. So again, Jeremy mentioned the critical output, which is your digital roadmap. That's really the high-level blueprint that aligns your digital initiatives with the clear member and business objectives and sets out the timing. It's really the tactical way you're getting to your end state. And so this framework we're covering today is going to bring the necessary rigor and comprehensiveness that will allow you to create that holistic phased approach to enable the business strategy, rather than a series of like neat and cool, discrete tactical initiatives. So ultimately, you can't have the one without the other. You can have a digital strategy, but without that roadmap, how do you get there? How do you get that sort of those steps you need to take? And the roadmap without the strategy is really, you have no destination. You don't know where you're going.
Thanks, Matt. The point I want to make on this slide is a very critical one, is digital strategy effort varies. So in other words, one size does not fit all institutions. What's very critical here is, although sizes may vary from small, medium, and large, the 6 steps are still the same. So if we look at the bottom left, for example, Bank of Montserrat, it's got about less than 100 million in assets, is one community bank, a single branch type bank on the island. Or you could look at St. John's Credit Union in Belize, which has ATM services throughout the nation, throughout the country, with their Network One partnership. 4 branches, and again, assets about less than 100 million. And you can move right the way up through the gamut, right up into Republic in your region, which is 130 branches, 15 jurisdictions, 350 roughly ATMs. And even here in the region, Credit Union Central Ontario represents over 200 credit unions and has over 1 million members. So no matter which of these you are, the strategy steps are still the same. It's just the speed and sort of the level of detail will vary as you move through it. Over to you, Matt. Next slide.
Okay, so the framework that we're going to walk you through today is going to yield essentially 6 deliverables. And really, so if we break it down, the first step is doing your external and internal scan and analysis of global and regional trends. And the second is your SWOT, or strengths, weaknesses, opportunities, threats, and gap analysis. These first 2 steps are really the same across any real strategy approach. These are, if you talk to any consulting firm, these are the initial steps you need to go through. And this is both sort of from a business perspective and a technical perspective. When you look at your assessments, consider your technology roadmap. It's going to be a key enabler of your success, but you need to include that. Digital enabler assessment, really there's a number of foundational or core enablers that you need to consider in your digital transformation. And this, we're going to cover these off because it really helps you to classify your initiatives, and these foundational enablers, you need to build them out as you grow and move forward in your transformation. Next, we're going to cover off the digital initiative scorecards. This is one of our tools that's going to allow you to quickly identify those initiatives that you should consider more deeply. When you get to that room and there's a whole wall of stickies saying these are all the key initiatives where we need to do to get to that transformed state, you don't have the resources, you don't have the people or the skills to address all of them. So you need to, this is a quick tool to sort of narrow down your areas of focus. Then we're going to move into business model canvas. This is a tool you can go online and you can read all about the business model canvas, but it's a great tool to use to articulate the value of your digital initiatives and trim down that list to figure out how you, like, what are the key initiatives you need to focus on. And lastly, all these, taking steps 1 to 5 will allow us to get to our digital roadmap. That'll help us identify the timelines, targets, accountabilities for each of the programs, where you need to actually apply your resources to move forward. Here's just a quick visual representation of the various steps in the strategy framework, showing you sort of each of those steps to build that kind of comprehensive strategy to succeed. There's many examples of digital transformations failing miserably, and really it's because people will do an individual step in isolation. They'll focus on the neat and cool. By following this framework, that's the way you get to a successful transformation.
Thank you, Matt. And that slide that he just, the visual slide he just came from is probably the key summary slide of most of this deck. So without ado, I'm going to talk very quickly. If you do an extremely good job of external and internal analysis, your SWOT gap analysis, and then look at your company's current vision and mission relative to your digital vision, you'll come up with a summary. So this is an important step that if you go to the next slide down, Matt, you'll come up with some sort of learnings from those assessments. And I'm just going to give you some examples of some of the types of learnings that you should be pulling out of your global and regional SWOT and gap analysis. And then I'm going to show you a visual of a high-level executive summary of what that summary should look like. So, for example, if you go out, you look at what are the global trends happening in digital or regional trends. You continue the SWOT analysis relative to your institution, your cooperative. Things you should be coming across are things like channel optimization, which tends to focus on online mobile and ATMs and other digital type solutions. A multi-channel customer relationship is very critical. Getting people onto these digital channels, especially in COVID, has become even more critical, as we have all seen. And leading with purposeful transaction migration. Onboarding is always important. It has been since digital channels launched in 1997 roughly, but getting people onto these channels is very important. It's not a build them, they will come approach. You have to constantly have efforts with your organization, usually the marketing teams, et cetera, to get people onto these channels, experimenting, using, learning, adopting. Very, very critical. And then you get into some of the technologies that we have seen globally. Cloud hosting is a great example. Matt will go deeper into the technology discussion later in the presentation. A huge change, which we've seen, and Diego again, Rivera is on this panel. Customer experience design and insight, absolutely critical. Making those digital experiences simple, easy for everybody to do is absolutely key to success. So innovation and personalization also critical. So as you step through a great customer experience, you don't even know that it's being personalized. And then the customer intelligence, again, which we'll touch on a little later, is a very important factor, you know, as we look at how data comes into this component. And we'll go on to the next page, Matt. Thank you. A couple more examples. We see increasing continuity to improve the customer experience and channel choice. The integration of channels, so it's not a multi-channel. Multi-channel in my mind is a one channel. I have this channel, I have online, I have mobile, etc. Whereas omni-channel implies the ability to move back and forth between channels in a seamless way. Cardless technologies, digital currency, moving away from cash. Again, we've seen it globally. The ability to join local payment systems to enhance those digital capabilities so your customers have better capabilities is, again, another example of a gap that we tend to see. And sales in the channels, the growth of sales of products, services across digital channels, and that could be anything from online to mobile to ATMs to other devices. And digital strategy as a new marketing strategy. A lot of our digital strategy, we won't get deep into it here, but it should also be a large impact into your marketing strategy of your organization. And if we also look at your current vision and mission, what you want to do here, what's critical in the slide, is that your digital vision and statement should fit within your current credit union vision and mission. A small example here, again, we're not going to get hung up on small words, but you do have to make sure your digital focus, which again may vary by institution and should vary by institution, fits within your institution's vision and mission. And we'll look at next slide, Matt. So if these things are done well, I'm going to show you a short summary of what that output should look like. But clearly, there's a lot of work to get through steps 1 and 2. We have a number of obviously competitive templates that you might use, researching digital trends, keeping away from what Matt and I call shiny toys, and focusing on things that will bring real value. So if we go to the next slide, Matt, what we see here is a sort of an executive summary of what a sample output of these first steps would look like. So a summary of what are those really critical global and regional trends we're seeing. I would really try to look at the FI's strength, weakness, opportunities, threats, positioning. Where are we strong? Where do we need work? What challenges are we facing? Are we not able to have access to broad ATM networks for our customers, for just as a small example. Then under the gap area, you should start to be able to summarize what is our co-op vision statement and digital vision statement, and then have sort of a summary of some critical components you need to focus on. For example, optimization and adoption, maybe customer experience design and continuity through the channels, and customer insights. You know, what are customers doing in their lives and how can we help target financial products and services to them? And I'll move from there. We're gonna move
Jeremy,
on. Yes, Matt.
If I could just interject for a second. I mean,
Please.
I think one of the key points on this sort of one-pager executive summary is really about, it's a tool. I mean, while it doesn't tactically tell you how to get there, it is a tool that can help you sort of align and mobilize your organization. And when you share it with partners, then they can see where you're trying to get to from a organization perspective, and it allows them to sort of look ahead in their own plans and their own ways to help you or partner with you to get that alignment early, and so everybody's moving in the same direction. So yeah, I think this is great, a great way to really communicate. We still need to do the next steps, but it allows people to understand your organizational context and where you're trying to get to.
Thank you, Matt. And if I was to put that in simple terms, what you'll notice through this presentation is we're taking you from the top of a funnel down to the bottom of the funnel. And this slide is a step in that journey, summarizing moving down the funnel, narrower. So it's a part of that journey and process. So 1 and 2, again, steps are very much like a traditional strategy approach, but step 3 starts to change, and it's a big change. So what we're going to introduce here is something called digital enablers. And next slide, Matt. What's critical here is we're introducing these 7 digital enablers. And I'm going to spend a slide on talking about each of them and why they're critical. But this is where the digital strategy approach starts to differ from a normal strategy. These are our building blocks for success. And if you review your financial services through these 7 lens and enablers, you'll come to some great learnings, I guarantee it. So we'll move on to the next slide, Matt. Customer experience design. I cannot underestimate how critical this area is. Diego Rivera, who was introduced as one of our panelists and be on at the end, I have worked with for many years. He is one of the strongest professionals in this area I have worked with and met in 20 years. And I'm being very, very honest here. He has a master's in customer experience design from a top drawer university. It is an engineering science is what you need to take away. We see a lot of courses offered this day and age that are get your customer experience design certificate in 3 to 6 months. But these are very light versions of what the customer experience journey really is. So it's being able to dissect flows, re-engineer flows, look at the design of anything from click to white space for any application. It could be your mobile app, could be your online banking, internet banking, ATM screen and screen flow re-engineering, sales platform re-engineering. All of this is what involves customer experience design. We've worked with many, many agencies in our experience, and rarely do they add sufficient value across the full organization. So we tend to lean towards an internal customer experience design team, or somebody that is giving you very good and clear guidance with senior oversight. It is absolutely critical in this journey. And we'll go to the next page.
Okay, thanks, Jeremy. When you look at one of the key elements of your assessment is the technology roadmap, but what you often see is a lot of confusion around technology, the role, what it is. People in organizations really get caught up in the kind of neat and cool elements of technology, but what they forget is really what it's there for. And it's really not about just making changes to technology. It's making the right changes to your technology to deliver the better business outcomes. Modern systems, I mean, and we're going to cover this in a bit of a deeper dive as well, but when you consider an existing FI, you are in competition with fintechs and cloud native disruptors. And often the FI itself is really being held back by its legacy tools. So part of your digital transformation, you need to focus on what those technology enablers are of your transformed organization. And really what you're trying to do is build capabilities and reusable services that you can reuse across channels and across functions such as sales. You need to simplify the integrations between platforms and partners, reduce your total cost of ownership. You need to consider that flexibility and agility with things like an API ecosystem, software as a service, platform as a service. Ultimately, you need to reduce your reliance on your legacy platforms to enable more effective operations such as sales, processing, etc. You need to consider consolidating some of your core functions, and you need to consider shared services to perform certain functions. Often an individual organization does not have the in-house skill sets. It does not have pre-built, say, access to payments. So often look to some shared services to expedite your ability to deliver those business outcomes. Consider cloud-based, rapidly scalable infrastructure. The days of sort of the big on-site iron are over, right? Sometimes cloud-based infrastructure might be the same cost as your current, but what it does is it provides you the flexibility to rapidly scale up to demand, leverage capabilities across functions, and certainly data across your various legacy systems. You also need to consider reducing your technical debt. Now, to explain that in a bit more detail, you have a bunch of existing core and legacy systems that you're retiring or converting, but when you roll out a digital initiative, you need to avoid spending any money on updating those, because those are wasted resources. You need to consider, how am I going to avoid sinking money into those when I deliver the new services. So ultimately, from a technology and architecture perspective, you need to create that scalable and efficient architecture and infrastructure to enable that business agility, to enable you to access partnerships in the future, to more readily acquire other organizations, and to enable that speed to market. So I'm just going to drill down. We're going to do a little bit of a deeper dive. Technology, I mean, when we talk about a technology roadmap and the technology services, we could spend a couple days just on this. But from a current state perspective, any existing FI, you've evolved over time. Often your technology has evolved without the benefit of that longer term vision. So what you're really left with is this spaghetti. And this spaghetti, where you have functions tightly coupled by channel, by legacy system, and this spaghetti makes it very hard for you to move forward with any of your initiatives. You have redundant components, you have product and channel silos, your customer experience across the channel or your member experience is very inconsistent. Your members jump back and forth. It doesn't provide that unified view you need. When you consider your technology model, whether it's in-house or outsourced, the review of the technology roadmap and where it's going is a critical aspect of your overall transformation. So when we look at what are you looking for from a future state? So really, you're looking at a technology wrapper around existing systems, and when you're building, you need to look to build those elements that provide the consistent customer experience. You leverage enterprise technologies, and you foster the nimble acquisition and integration. So from a future state, you're moving towards a consistent customer experience across products. You're simplifying your integration between platforms. You want to reduce reliance on legacy platforms and enable more efficient operations. So just when you consider this, if you're enabling the sales of a loan product on your online channel, don't build it just for that channel. Build it in a reusable way. So then when it comes time to enable those same sales products on your ATM channel, your mobile channel, your mobile tablet, it's very easy to just call that same reusable service to shorten the time to market for that piece. And then establish a cloud-based, rapidly scalable infrastructure. This gives you the ability to more rapidly deploy capabilities, as well as not as sort of loosely coupling it to your core systems. And then just, you see on this slide, it says future acquisition. If you're acquiring another FI, a different set of customers, by having built those reusable services, it becomes very easy because you don't have to spend a lot of time tying it into a new core banking system. You can just reuse those same services to provide the capabilities you need.
And the next digital enabler is one we call human capital and culture. One of the reasons that you create a digital strategy is so that the executive leadership and the various members of the cooperative are clear in understanding the vision, the objectives, and the commitment to the digital strategy. So it's really down to consistent messaging of the vision and right down to the roadmap, which we'll get to, across the organization so that everybody understands what the priorities are and where we're going. You've got to create a culture that encourages collaboration between various teams, and that can be various product teams. Business and technology is a very critical one, whether that technology is in-house or outsourced. It's still the same approach. They've got to be viewed as partners and working towards the same goals. There's got to be some innovation. You can't be scared of change. And sometimes you're going to be incredibly successful, but there will be some failures along the way. So that goal of taking some risks and accepting that change will happen has to be in the culture that's going to be as part of your digital transformation. What's very important is, do you have the right digital skills? And that I mean, do you have the right people with the right knowledge? And that could be even in your product teams, your marketing, your customer groups and analytics, the right technology people. Having the right people is very, very critical. You can do an incredible amount with a very small team if they're skilled. And that's very, very important. You may have digital skills in-house and not already know it. People who are social media experts, home coders, there are skills, I guarantee, around you. It's a matter of how to focus those skills and leverage what is there. One of the biggest learnings that Matt and I, as we share a coffee from time to time, is, and we've seen this across multiple continents, the collaboration between the business teams and the technology teams is absolutely critical to success. There's so many times where Matt and I have gone in with partners and sat down in other countries, and our partners at the table are shocked that the business is talking to the IT team. So Matt and I have always had a very different view of how this should be, and working together has led to a lot of our successes that we've had over time. So it's a critical element. Joint application development, or what some of you may have ever heard of JAD session, is a prime example of working together through these things. And Matt will talk about Agile in a bit too, but there are various tools to get business and IT to work together, but it's very, very important. Create, support a culture of collaboration, that innovation, get the right talent on the ground, have clear, strong executive support of that vision, and you're off to a good start. Next slide, Matt.
Okay, so another enabler is optimized end-to-end processing. Your customers no longer are willing to wait for their paper application to proceed through your back office through multiple hand-o-matic processes. They're not looking to re-input their information online to fill out a sales form. You already know that information. If they want a second product, they again don't want to put in their information again, really. So really, from a target state, you're looking to optimize your end-to-end processing, really working towards some straight-through end-to-end electronic processing, but that's very difficult to do, and that's sort of your longer-term future state. What you need to do is you need to enable selected processes, payroll plan setup. You need to build that interface to your multiple back office platforms. Sometimes you have if you're selling a bundle of packaged products, you need to be able to send that information to each of your back office systems at the same time. and avoid the customer having to do it. By building some of the reusable processing pieces like access to your fulfillment systems or your adjudication, you need to sort of build those common tools that will be used across multiple processes. So really, and this is a lot about sales growth, driving adoption, signing up for your online channel. It's you need to enhance your tools, take advantage of analytics drop opportunities, personalize forms, pre-fill forms, and then automate their fulfillment to make it seamless to the customer. Maybe in the short term, you just hide that complexity behind the scenes, but this is what your customer is looking for.
The next enabler is called data analytics and artificial intelligence. A very critical one we're in sort of the Web 3.0 stage of evolution. So data and data management and analysis is really a new underlying core competency. If this is not within your financial institution or cooperative, then consider partnering with fintechs or others who are skilled in this areas. You've got to be able to better use that internal and external data to drive customer offerings and some customer insights. There's no doubt that financial institutions have had for many decades extremely strong internal data. They know a lot about their customers, their demographics, their value. They may be isolated in different systems, which is a common issue we see, but you also need to understand that their life cycle needs and generally. So if you put all these things together on the internal data, you have a lot of knowledge. You tend to have a lot of knowledge. It's putting the key ones together that is important. It's also important to look at what external data sources can I use. This could come from payment switches, social media feeds, or other partners, merchants, employers, in the retail side of the merchant case. The end of the day, in our experiences, you're going to get 80% to 90% of the value of data and analytics out of about 12 to 15 variables. So many times when we talk to partners over the years, Matt and I come across people who think this is hundreds and thousands of variables. And yet if you talk to the vendors and you learn from those who've been successful, it's a bit of the 80-20 rule. I will get much of the value out of a small number of variables. The challenges in this area: where to get the data, what are the priority of the variables, how do I link them together, consolidate them back into something that's useful, and extract some insights. You also have to prepare data in terms of new regulations that are coming up. For example, in open banking, where we have the practices of providing data to third-party financial service providers and an open access to consumers. So that's important to consider. You've also got to consider the changes in the Payment Services Directive 2, the PSD2, which is really starting to move in Europe, where we see focus on improved customer authentication and requirements and third-party involvement. And we also see general data protection regulation being advanced as well. So you have to look at what is coming down from a regulatory perspective into my data requirements as well. But bottom line, leverage that information analytics and be smart about it, and don't try to boil the ocean. Pass back, next slide to you, Matt.
Okay. So you'll notice that this is one of the only slides in the entire presentation that has text in red. And it's really one of the top risks facing FIs is cybersecurity and the privacy and data protection. I mean, as you enable more digital capabilities, you increase your potential fraud and security and privacy risks. Nothing's going to destroy your reputation quicker than a serious data breach. So this is a sort of ubiquitous concern that as you look at your initiatives, this is one of the core elements. I've seen in previous work where there's been agile teams that have they focused on speeding initiative out the door, and neglected to engage their security partners. They considered them a control group versus a partner in this kind of inclusive initiative. And the next thing you know, they had money leaving the institution very quickly as they became a target for fraud. So you need to make this one of your primary focuses. The personally identifiable information is critical. You need to protect your customers, and you need to make sure that, I mean, one of the biggest challenges for digital adoption has always been customers' concerns about their security and privacy. You need to lock this down, and you need to make them comfortable with that you are addressing some of the challenges. This is also a very lengthy subject, so what I would highly recommend is people attend the May 13th event, Staying Secure in a Digital World. It's being led by Paul Macon, and I think it's a really a great way to get the details that you need to address this.
Matt, can I interject just to add one small point on the slide? As Matt and I had said, we've been in this industry a long time, over 20 years. One of the things that if I go back to 2000 when digital channels were first launched, is when you talk to customers, usually their first comment is it secure? Are the channels secure? Should I use them? 20 years later, 2020, 21, it's the same thing that comes out of customers' mouths. Are they secure? So my point is, in your marketing, communication, and your education of your staff, you have to be able to expect to be able to talk to customers about that point and hold their hand and convince them that you have the trust and you have the capabilities in-house to make it very secure. So it's a very critical point that has never gone away, and it will always, always come up with customers. And it's very important part of your marketing and your channel communication and your staff communication from that perspective. Thanks, Matt.
Great point, Jeremy. So today everybody's facing, how do you meet the disruptive competition and your changing markets? I mean, really what you need to do is enable sort of flexibility, agility, adaptability within your organization. And you can do that through innovation, accelerated delivery techniques, and partnering effectively. By taking care of a number of these elements, you're going to position yourself to deliver initiatives faster, to be able to pivot effectively, and really redirect resources from low impact initiatives to those that really make a difference. So there's a number of ways to be able to do this. There's technical ways. Now, this bears a bit more explanation. Employ a two-speed IT model. So many organizations face a challenge with how long and how much resources are needed to change their legacy systems. So you pretty well have to accept that. That's a fact. But what you can do is, as you move sort of the old school waterfall way to change your legacy systems, you need to simultaneously build out capabilities to keep separate some of the quicker, faster ways to deliver, such as using APIs, software as a service, partnering effectively. So if you've built out some of those technical enablers, you can still suffer the slings and arrows of a slow legacy change, but you can still deliver initiatives that have impact simultaneously. Looking at process related things. So accelerated funding approval. I mean, this is a funny point, because sometimes, despite people saying they're going to accelerate the approval for funding of key initiatives, they still have multiple checks and balances, and 3 to 6 months later is when you finally start an initiative because the resources are now available. So really, you have to look at your existing processes on how you allocate your resources and figure out a way how to deliver resources to those high impact initiatives sooner. you need to look at your roadmap. You need to build out processes that allow you to review, understand value, and adjust if required quicker. Looking at processes, things like faster fulfillment and adjudication for sales. I mean, these are critical pieces that will speed your getting the benefits you require. Jeremy mentioned cultural. For accelerated delivery, there's agile teams and methodologies. There's a lot said about this. They are very effective if you've implemented them correctly, and if you establish communities of practice needed to make sure the information is shared between your agile teams. Consider incubators and innovation centers. These are great, but when you consider what their purpose is, really they're building your digital culture, but they have to be inclusive. These are really the feeder pool for transferring digital culture to your organization. They can't just be the neat and cool kids isolated that really do things by themselves and then don't bring their partners along in the greater organization. So doing this right is a great way to be successful. Doing it wrong is a great way to stop your transformation in its tracks. Really you have to consider partnerships. You might not have all the skills or experience needed. You don't have the time to deliver something that's a core competency for a fintech or another partner system. So really, partnerships are great ways to advance yourself quickly without having to sort of take resources away from other critical activities. Consider business alliances, work with other businesses, say, for example, enabling mobile tablet Salesforce in one of your partners. You deliver sales using somebody else's Salesforce. You can really get some great benefits from considering this type of thing. And also consider packaging services with partners, bill payments, agency networks, insurance, etc. So really, from a digital enabler perspective, it's really you need to create and provide innovative solutions, deploy those rapid delivery models that support the growth and agility. You need to accelerate connectivity, build alliances and partnerships, all with the goal to enhance your business capabilities and business results.
So we've covered the 7 digital enablers. And this slide is a summary on the left, clearly, of those enablers. And as we move again, kind of down the funnel, we've given you a description of what they are and the assessment that the organization or the institution needs to do in each of the enabler areas. And that's generally covered sort of high level in the description. But again, what we're trying to get you to do is part of that assessment through the digital, each of the 7 enablers, is to get down to key activities. Where are we strong, but where do we need to make changes? So, for example, under some of the key activities in customer-centric design is maybe you don't engage this discipline at all. So clearly you need to take some baby steps in terms of CXD and start to build out a team, whether it's all a small internal or look at leveraging possibly some outside experience. Very important. You need to continue that integration between the customer sites and the back-end systems in the customer experience to give that continuous channel experience. So if they're not there, you need to look at some systems to put in place, whether it's Salesforce or a local middleware. Matt covered a bit of the high-level technology, assess the current state and the future state. And again, what you're going to find is you should come away with some key activities you need to focus on. Maybe it's establishing some middleware that allows some reuse of those capabilities and APIs. Maybe you're not scalable and you need some cloud-based architecture. But again, it will identify, a handful of initiatives that you need to start moving on. In terms of the assessment of the enabler and the human capital and culture, creating a plan and communicating it is, part of this exercise, but also understanding what culture changes do we need to make? Do we need to be open to innovation and change? Because it's not natural in all of us. What are the lighthouse initiatives that we think, which are really, what is going to shine the beacon for this institution across the waters? We really need to look at what current talent we have, and this is usually an exercise with the human resources team. Where are we lacking specific talent, and where do we need to compensate for it? And again, whether either internal hiring or looking externally for that talent is part of the plan. You need to define some innovation objectives and some core skills for the enterprise in the program. So that's, again, out of each of these enablers will come a handful of key activities. Optimization end-to-end, that fourth enabler, maybe you're really not using any data on the customers into your digital channels today in terms of either targeting products or services, or even good email communication as an example, or targeted communication. So implementing a basic customer relationship management system, integrating some middleware, etc. Can I enhance record keeping components to support our increased volumes, etc.? So again, what comes out of that review of the end-to-end optimization? Which naturally leads into what are the recommendations on the analytics and AI side? Do I need a small store or data warehouse, or just small technical digital pool to store this data in? I guarantee you're probably gonna have to look at new metrics and reporting, and we'll talk about that in a little more. Digital KPIs are unique and generally not well understood. So getting that out across the organization is going to be really important. Matt talked a fair deal about security and privacy, making sure we have the right practices around all of these initiatives as we move forward, and that we have good security controls and monitoring. And that if we are lacking in areas, that security initiatives are also on the roadmaps and the priorities. And finally, so the innovation acceleration delivery, which Matt also talked about, how do we improve things like software delivery? Could be methodologies, could be, as he talked about, two-speed IT delivery. How do we define and execute innovation plans? At the end of the day, what you see is, again, we're narrowing down the funnel, and we're starting to see a list now of activities that are going to take us into the next stage. So at this point in the strategy, you're probably going to have, I'm guessing, depending on the organization, small to large, you could be running in a large organization. This list could be approaching 100 different activities as an example. So the next step 4, you're going to see how we start to take you and narrow that example of 100 down. Over to you, Matt.
So Jeremy is very right. I can remember working with an FI where I came into a room and they literally had about 100 different sticky notes broken, laid out on a wall. And really, when you consider the number of initiatives for your digital transformation, it's really got to be enterprise-wide. It's got to be across all your product and business groups, your technology groups. So when you're faced with that very imposing room of 100 different initiatives, you need a tool to quickly prioritize this to get to sort of a much smaller pool of initiatives that need deeper consideration. So you don't have the time, money, or interest in trying to deliver all initiatives. So you need to figure out a way what to target first. So this scorecard is a tool for quickly, the emphasis on quickly, assessing priority of digital initiatives. So really, how is it different from regular valuation approaches? First, most important, it's quick. Really, you can focus on these 6 elements to quickly prioritize things, and this will enable you to quickly separate the sort of low value initiatives from the overall collection of initiatives. So really, when you look at those elements, is it mandatory, regulatory? Does it make a positive material change for your organization? Does it enable one of those, or does it enable a digital key business driver? Is there a clear and realizable path to implementation? Does it strengthen those core foundational digital enablers that are key for the longer term growth and capability of your organization? Does it change our culture in a positive manner? So really what you can use this tool to quickly look at both the initiatives scheduled as well as ones that you're considering. Do we direct some of the work on some of the existing capabilities, or do we look to delivering new?
So as Matt said, we're just going to concentrate on that list of A through F. We're just going to pick up on 3 of them. So one of them, the first one is the third one down, that was C, was the key business drivers. So as you look at each of these initiatives quickly, again, this can be probably a 30-minute exercise for each initiatives, but you want to run through a list of key metrics and start to understand, does that initiative change my key business drivers? And some of these examples of key business drivers are net promoter score, or your customer satisfaction scores, retention, share of wallet. These are normal type metrics, as are the financial. I'm not going to go over those, but you have normal things like, interest margin, average loan amount, default rates, etc. You start to get in some digital drivers that start to become a bit different. So does that initiative have the ability to drive people to my digital channels? Is it automated or a manual process? Does it support one or the other? Does it support onboarding users into that service or channel? Is it moving my sales, digital sales in the channels? And I can go on. A key one we'll spend a slide on and a few more is the transactions per channel. Is it creating revenue generating transactions or non-revenue generating transactions? For example, mobile top up in some of your regions is an interesting one. And then you can look at an internal process in your metrics. Is it making us more efficient and more accurate? Is it increasing speed for the organization and the customer? And is it moving our employee satisfaction and retention? So you have to look at it across key business metrics from that perspective. Next slide, Matt.
Okay, so often people get caught up with the coolness of something, but haven't spent any time trying to realize, is there a clear and realizable path to implementation? When you have when you have a lot of ambiguity surrounding initiative, how you're going to get there, oftentimes that sort of twisty path will lead to a wrong result, or a result that is less than what you anticipated. When you look on this slide under the direct path, these are a number of elements that you need some clarity on for initiatives. Otherwise, by not having the right amount of information or detail, your chance of success for an individual initiative is much less. And your chance of, the damage to the credibility of the project, and sometimes your greater transformation can be significant. When something touted as, part of your digital journey fails, then it often puts into, a poor light the rest of your initiatives. When if you'd spent some time trying to see the path to implementation, you could have avoided that challenge. So again, talking about the digital enablers, this is a key consideration, because when you consider initiatives that strengthen your digital enablers, this is the foundation for your organization's target state. And when something builds on these, or builds the foundational capabilities to be used across the organization or across initiatives, you really need to put a priority on that. So where does that leave us? So you've been able to look through your initiatives very quickly, and you can give it a score between 0 to 6 to understand sort of the value and likelihood of any of those initiatives being successful. And just when you take your initiatives, doing this quick scorecard will allow you to sort of really recognize the the initiatives with a higher score, that will sort of be a very positive initiative, and one that requires some deeper consideration. So that's when we move into the next step, the business model canvas. This will allow us to do that valuation.
Thanks, Matt. So this is, we're getting towards step 6. So step 5 is, again, further down the funnel. Now that we've come out of the enablers, we've assessed which of, say, that 100 are maybe our top 10 to 15. This tool will now start to articulate even deeper the value of those remaining ones that got through step 4. So let's look at the business model canvas on the next page, Matt. So what's important here is to consider the business model impact and true value of digital initiatives. This is where it's important to take a different lens from, I would say, historically, how financial institutions have valued business cases. We all understand sort of a green dollar approach, where you look at product revenue and come up with financial benefits. Digital business cases have to take into account new green dollar elements, what we call, can be called direct benefits. For example, a higher use of our digital channels because of an outstanding customer experience design and well-designed site that people find easy and fast to use. It will bolster member retention and drive transactional revenue, which customers are doing themselves in, say, the digital channels. There are also what we call brown dollar indirect benefits that have to be articulated. This could be, what is the value of the increase on your net promoter score? So maybe I had an old mobile site, or I didn't have one at all, that had a very low score or was not well received by customers or members. And the new site is 3 times that positive change. So you can actually articulate a value, what we call a brown dollar value of that increase in member retention and member promotion. You could also look at the shift from transactions that were being done in branches to transactions being done in digital channels. So a bill payment's a bill payment, but in fact, the organization has a massive cost difference being done in a branch versus being done digitally, and capturing those changes. So you have to look with a different lens when you're doing that. And next slide, Matt. What this tool does, as I said, takes you further down the funnel. So it has a number of components, which are, you can see on this slide. Not every initiative of those remaining 10 to 15 will fall into one of these buckets. But what you want to do is go deeper and articulate numerically, as I said, with these direct and indirect benefits, the value to customers, the value proposition of the initiative, how will it change our channels, our customer relationships. So you want to run through and articulate in this business model canvas how that initiative isn't impacting your area. So view this as a mini business case. That's what you're trying to articulate at this point in time. I'm going to show you an example, and you can look up online business model canvas and learn all about this tool, but it's more of a tool designed in the digital realm to pull out these digital variables and articulate how they're important to the organization. And Matt and I have done this in many times, and it's, when you're dealing with your finance team, it's interesting because this tends to be an education exercise for your finance team because they tend not to normally think in those approaches. So it's a bit of going back and forth education within an organization to teach them and recognize that these in fact have value. An example here is a dynamic credit for personal lending. Let's say you've created a very strong personal lending form for your existing members in online banking who are interested in personal credit. So you fill out the boxes. For example, does it make all of our activities more effective and efficient? Do I need data analysis in here? What's the value of that? What I'm not showing in this example is the actual numbers, and numbers should be beside each of these boxes. So we're articulating here. I'm just going to take a drink of water. We're articulating here the areas of the value proposition. The final step would be to put numbers beside them, as I just mentioned. So for example, in the customer relationship, I'm actually now able to offer personalized offers to various people on lending. As a result, I'm going to get a higher promoter score, retain more customers, and have a higher satisfaction index. Maybe I'm smart in designing this dynamic credit even for new to co-op members, again, which would increase our loan portfolio, which you can articulate the value of. Maybe it makes my customers come back to check their loan, their new loan that they've just received in this dynamic credit tool. And they visit online and mobile banking more as a result to check on the loan balance or use it. So again, that has benefit and can be articulated. So you get back to the bottom two, which are a little more somewhat traditional cost structure. Can I reduce costs by taking it and making it digital, and then revenue streams. But the important point here is you can quantify those direct and indirect benefits, and then you'll be able to get a gauge of those final initiatives on which ones are really moving the dial and which ones can come a little later. So I'll pass it over to you, Matt.
Okay, so ultimately the digital roadmap is the output from the previous 5 steps we've gone through that aligns the digital initiatives with your business and member objectives, sets out the timing that can communicate it across your stakeholders. This is really what answers the how we're going to get there, what we're going to do, and when we're going to do it for your digital vision. We're running a bit late, so I'm not going to go into much detail, but really the end result is a more tactically focused illustration of your digital journey for your organization and the timing. So when you consider some of the capabilities, when you look at your future or target state, you can't spend the time to get there in 3 years. So really when you consider initiatives, you need to consider what are some of the foundational steps to build out to your target. For example, when you consider rapid delivery, if you look at the very bottom box for innovation accelerated delivery, you see the topmost piece is the rapid delivery. You have to define your approach. You have to really, figure out how to do it through pilots, and then as you move forward, you can start deploying agile teams, continuous integration and delivery, DevOps. Like, make sure when you consider the journey, the multi-year journey, how you can build on top of previous initiatives to get to your target state. What we don't call it explicitly is the security and privacy enabler, because really this applies to all these different components. So it needs to be ingrained as part of each and every one of your initiatives, and make sure that those teams are part of that transformational culture.
So we've now covered the 6 steps. So we're just going to sort of show you, this is what it looks like putting them all together. So we'll move on to the next slide, ma'am. Really what we've covered is, looking at that external and internal assessment, the SWOT and the gap analysis, completing it. Again, that's the traditional strategy component. We've introduced the digital enablers and gone through how you need to make an assessment relative to your institution and cooperative of each of those, and narrow down the funnel to as we've done in with the digital initiative scorecards and business model canvas tools, to bring you down to specific components. And then, as Matt showed, displaying the digital roadmap. And you can see very clearly that once you have gotten to a roadmap, the ability to communicate that across the organization is going to be very, very powerful, from executives, the C-suite, right down to your frontline staff, of them understanding what you're going to do in each of the years coming and why you need to do it and what the impact will be. It's not a static thing. This is not a once and done. It is continually measured it with metrics, monitor it. Are there changes in digital enhancements coming that are affecting us, new regulation, and adjust the roadmap accordingly. But it allows you to be very clear and move forward, and it's very, very critical. One of the other things that having a digital strategy does is we've all been in situations where I have either, in Matt's case, technical vendors coming to me and wanting to talk, or business vendors saying they have the newest, greatest solution on the next. If you have a strategy, what allows you to do is focus and find vendors that can help you be successful. So it puts you in the driver's seat of what are the vendors that I need to be successful, as opposed to everybody knocking at your door saying they have the next greatest solution. So from that perspective, I'll pass it back to you, Matt.
Okay, really, and when we consider what are the rewards of this strategy-focused approach, as Jeremy mentioned, one of the most powerful things that will facilitate your transformation and your digital journey is that collaboration and alignment between business and technology. And regardless of whether your technology is in-house or outsourced, having done this strategy framework, it allows you to clearly articulate and align your partners, and as also managing your service level agreements more effectively. When you consider your strategy, this enables your partners and your teams to become aligned, to share that success from co-creation, and make it clear so that people don't waste their time and effort going in sort of dead end, sort of paint themselves into a corner initiatives. And it also allows potential partners to come to you with something that might really facilitate your execution and your strategy. So, really, it's a great tool to align business and IT. It avoids dead end or orphan initiatives. The key piece is the greatly improved ability to budget time, money, human resources on the initiatives that count. And ultimately, one of your targets, you have an interoperable, unified customer journey and experience through all credit unions products, services, channels. And this is what will drive your member satisfaction and drive your successful business outcomes. We're running a bit late on time, but there's many more rewards for this. Then we're gonna have some time with the panel to explore them. And I just wanted to thank everybody for attending. It's been really great to have everybody available. And so now I'm going to stop the slideshow and move to our panel.
Thanks very much, Matt and Jeremy. So we've got lots of questions in the chat, and I'm going to just pull out a couple of them and get us started. I would like to just, as we were ending with a little bit of discussion there that circled back into technology, one of the questions that came up is about the idea of, is it advisable to replace all of my systems at once or in a step-by-step approach? And I think that circles back, does it not, Matt, to your discussion about creating sort of a two-speed approach to your technology. Would you have any further advice on that?
Sure, absolutely. I mean, you could never replace all your systems at once. I mean, the challenge is one is going to break, one is going to take more time than you expect. I think you have to, work with your technology and business teams to identify the changes that have the most value. I mean, this is critical. You don't have the time and resources to effectively change everything. Identify the ones that have the most future potential, and identify, ones that are tightly coupled across multiple platforms, and then focus on sort of building that more loosely coupled capability. So yeah, like any key initiative, and why we described it in respect to this framework, identify the ones with the highest value and start on those.
Great. And another question that I'm going to throw out here, and I think some of our panelists might have something to say on this, perhaps Earl and Bobby also. A question says, many financial institutions tend to focus on short-term goals and quarterly targets. How do you build a culture of experimentation and innovation? So I see this question as sort of saying, how do we get out of this thing of we've just got these targets that don't really align to the actual pace of what we're doing, and that don't keep our people engaged. So do you have anything on that? And I am sort of throwing this out also to Earl, because he has dealt very much with how to build a culture and plan of organization that is enabling.
He's on mute.
Oops.
Well, let me take that just before
Yeah,
Earl
sure,
gets
go
off
for it.
mute.
Okay.
One of the, if you look at the roadmap that we articulated on step 6, what you didn't see is you're also able to, over those sort of 3 years, articulate the financial value to the organization. So in other words, I can actually go and take my digital initiatives over 3 years and understand the financial impact of the organization. You actually work with your finance teams and actually take that and build that into their budgeting, planning, forecasting. So it sort of helps you break out of the mold of short-term focus, and it actually gets you into the longer term planning and organization of the bank, which is actually very critical. So that's one of the ways you sort of get out of that realm, and why this approach helps you remove off the, hey, we just did this short digital initiative, it had questionable impact, we need more money. So having that financial articulation of the value of the digital strategy is actually quite important from moving to the long-term planning and initiatives perspective.
Yeah, if I may just add to that, in terms of how do you move forward, I think it comes back as well to your overall strategy and vision for the future. And where do you want to take your organization? What is the competitive landscape? And what are the opportunities that would present themselves in that landscape that you're not currently maximizing? So I think that's important. Having a very, very clear customer vision, how you want the organization to behave, how do you want the driving principles to sort of play out at the field, is also important. And maybe getting to understand your customers a lot more, right? So you can connect with them, increase that share wallet and improve the profitability over the long term, and keep customers for the long haul, not to view customers as maybe a short-term type of thing, but you want to have a customer for life. So if you take that kind of long view of customer relationships, then I think it will help you to move forward. And with that whole process, it's very important to get the feedback from the customer satisfaction. Are you doing what you plan to do? And if you aren't, how do you address those gaps? So there must be a framework around customer satisfaction, a framework around employee feedback, a framework, how do you coach, how do you develop, how do you refocus your team to those long-term objectives of the organization or goals.
If I could just add, digital transformation would put you in a far better position to achieve the objective of changing the culture in the organization. First of all, any successful organization would or should have short, medium, and long-term objectives. But those objectives will only be achievable to a limited extent if there is not active promotion of goal alignment from the top down. Now, digital transformation will give you some additional tools, including data analytics, to predict and anticipate customers' needs at a particular life stage, so that when you get to that engagement stage with the customer, your teams will be able to align products and services with the particular life cycle, but driven by up-to-date intelligence. But the whole idea of goal alignment would help to foster a greater team effort. And somebody mentioned earlier in one of the questions, I think, how do you promote inclusivity? Because very often your line staff observe gaps on a daily basis which are taken for granted but are not communicated up the food chain, with the result that you have opportunities that could easily be missed if there isn't a culture where the desire to share services, and certainly a culture of trust, will promote that kind of dynamic.
Thank you. I think that's that actually sort of segued very well into this entire idea of using this whole transformation as a reason to empower all of your staff and your volunteers to be part of saying we're going to give a better product and service to our members. And yeah, I think keeping that front and foremost is very important. A little bit, we are very happy to continue speaking and answering questions as long as any of you can stay with us. And again, I apologize for the bit of a glitch at the start, and would like to say there is our lesson in disaster recovery and having our rollover. I have a question here which says, what initial approach to these digital strategies initiatives would you recommend for a small credit union with currently very limited IT infrastructure? I think that's a good one. Matt?
I mean, I can certainly start on that, Lisa. I mean, when you looked at as we went through the deck, really it's talking about prioritizing initiatives. But if you have very limited IT infrastructure, how are you sort of considering that from a future target state perspective? You need to look at your internal team and then what their roadmap is. You need to look at partnering, right? If you have limited IT infrastructure, then some of the digital capabilities you need might best be acquired through partnering with the right organization. Get those economies of scale by using like some shared infrastructure or accessing a payment system or something else. I mean, you don't have to, regardless of the size of the organization, you need to sort of look at this framework to help you kind of plan out how to succeed. But having limited IT infrastructure is, what can you do to transform with the existing infrastructure, and what can you look at from an opportunity perspective? And again, it's internal opportunities, external partnerships. You can also deliver with your existing infrastructure better and quicker, right? So it doesn't mean that you by limiting yourself, it doesn't limit you to accelerating delivery on your existing infrastructure.
Is there a point here, Matt, about also if you don't have a lot of legacy technology, an institution like this, a credit union like this, might be in a position to really benefit from some of the sort of banking in a service or initiatives which are on the cloud, because they're not trying to deal with this massive install base of old technology.
No, that's an excellent point, Lisa. I mean, when you consider Canadian credit unions, they're looking at a common shared service provider. If you're working with your legacy systems, but you don't have much, then the ability to sort of pivot and move to a different architecture, different platform is a lot easier. So that's a great point, is consider how you might just sort of do that shift at one time to a whole new platform. There's a number of providers of platform as a service, software as a service that could be leveraged to quickly move forward.
Right, and if you've got your executive summary, you know where you're trying to go, you've got your roadmap, then you have something to measure what those potential partners and service providers can actually give you. Am I on the path there, Matt?
No, absolutely, because that's really your requirements. Those that executive one-pager summary, it's like, what can you do to, can you provide me with this? It allows people to sort of map your objectives to capabilities. So when you're looking at reviewing, doing an RFP, or looking at people that say they can provide those services, rather than be distracted by the flash, you have very clear statements on where you want to go.
If I could just add to that.
Yeah, please.
Small story. I was at a conference many years ago and talking to a gentleman from a small credit union on the business technical side, probably 20 branches roughly size. I was actually blown away by what they were able to accomplish. I think a lot because they don't have the big red tape that you know, I think handcuffs a lot of organization, but they knew very clearly what they wanted to do and where they were going, and were very, very successful in their digital efforts.
Great. And that kind of ties in. I've got a couple of questions that go around channel continuity, but also now talking about user experience. And in my mind, there's kind of a link between those two things. The way that as someone doing banking, as a member, as a customer, I want to be able to do it across all my channels, and I want to be able to do it quickly and easily. Can I throw that out first to Diego to talk about what are some of the key things when you think about making your digital channels and your digital product really accessible to members who may not have any uptake of digital until COVID?
Thank you, Lisa. That's a great question. So the key thing is to understand why is that they are not accessing your products and services. In this case, the inclusion. And for that is basically trying to put together a customer experience process to listen out and trying to understand the basic needs of your customers. So that is number one. But number two is also understand the people who do use your services. There is a reason why they're using it. There's a value proposition in your services that they actually like. So by understanding what is the primary value proposition that you are offering to your clients, then you can use that to try to entice people who are currently not using your services actually become regular users of your platforms. In Latin America, in the region as a whole, there is a lot of inequality between countries. So it's one of the key challenges, for example, that you will find out as part of the customer interviews or customer understanding is that access to the internet through mobile phones. Even though the mobile phone penetration is high, not everybody has unlimited access to internet through the phone. So that, for example, that is just one example of some of the barriers that customers face when trying to access digital services. So, but that is some of the things that you will find out through talking to your customer base, trying to segment customers based on how they use, what digital skills they have, and so and then using those insights to build your products and your platform to address those barriers.
If I could just add one small point to Diego's point is, Diego hits on a very, very critical point, something that we've always done. I've worked with Diego for many years, and again, he is as strong as I've said, is we go into markets and when we talk to customers, whether in focus groups or others, but this is a part of our modus operandi, and it's a very critical part. And I'm always amazed when I see other vendors or consulting firms not have a critical step in there of talking and listening and learning from their customers. It is paramount to the success.
Yeah, and that's, sorry, just want to extend on that. Even though the user-centered design process has been in the industry for more than 20 years, now it's more popular with the design thinking process. But it is amazing to me that even today, you'll find well-established companies that don't have a user-centered focus in their development of their digital initiatives. Although that is changing, but you still find some hesitation or maybe there's a lack of clarity of how to get started. But it's a critical piece, especially today, when you're trying to optimize your channels and you're trying to increase adoption. Ease of use is stakeholders, is a critical aspect of any platform.
If I can chime in there, yeah, this seems to be a place where credit unions have an advantage, right? Because they really are involved with their members. They have an attitude already, which is ingrained, which is that it is members first, that the institution exists for the members. And so it seems to me that if they take that same approach as they go into designing for digital, they'll keep away from things that are flashy, that are useless, that are frustrating, and instead say to their customers as they encounter them, what do you like and what don't you like, and be receptive to that change. And as to your point, yes, we've all seen large institutions think that, flashier is better, only to find out that flashier takes too long, too much data, too much whatever, and doesn't actually deliver what the customer wanted. I'm taking a look here in my questions. I have an interesting one here about how can we encourage the seniors to become digitalized and the youth to get involved in leadership roles. And I think there might be some feedback there from Robert and Earl, and even Robert, from your experience on the ground living in the Caribbean. What are you seeing in terms of how can seniors and people who have so far not been involved with digital be encouraged, and how can we make their grandchildren and their children empowered to help them?
I think that's a very interesting question. We could probably spend quite a bit of time discussing the pros and cons of the various approaches. But I think if we can foster linkages between the younger dynamic and the seniors in segueing into the more liberal use of technology, it would create a greater level of comfort and ease. I think the ease with which seniors can have access to the technology and the reliability of the outcomes are critical. I remember many years ago when ABMs were being rolled out across the currency union, the Eastern Caribbean Currency Union, there was some hesitancy as to, what number of ATMs per 1,000 customer base would have been appropriate. And the uptake was just absolutely amazing. There were some assumptions made because I'm not certain if enough intelligence was gathered on the ground as to what to expect. The approach was largely driven by assumptions that were made. And I think a good start would be to gather some intelligence from your seniors-based community as to what level of technology will you be comfortable with in so far as promoting the more active use of digital technology. I think making the assumption that because I am a senior that I would probably be reluctant to use the technology is a misnomer. I really do believe what we need to do is to get feedback from that base or a segment of that base as to what might be the best approach. But I think the key linkage is between the older segment and maybe the second generation engagement with seniors. I don't know if Earl has any thoughts on that.
I'll add a few comments to that, Bobby. I guess in my past life in Jamaica, I guess we had a large challenge at a particular location where the banking population consisted of a significant amount of seniors who would come into the branch network, but they could easily have gone to the ABN. And one of the things that we found that work is that for seniors, if you can provide that hands-on, show me, help me through the scenario, educate them, that you were able to get a fair percentage to migrate. And of course, you found some that were just as astute as you and skilled as you, that they just gravitated. So I think it's really a mixed bag, but I would say that hands-on education and taking the fear out of it, the reaction that I've got is that, you know what, I prefer to make my deposit in the branch because I know it's going to get into my account. There's that sort of educational piece that you need to create. Whereas if I go to the ATM to withdraw money, I'm taking money out. But how secure is it is another issue, I think, with seniors is that fear of saying, where's my money going? How can I touch and feel it? And I will share a very ridiculous story. I was in another location within the Caribbean, and this elderly gentleman would come in periodically. And I don't remember the exact amount he had in the account, but I know it was probably over $50,000. And he would ask to withdraw every cent, count it, and then put it back because of that fear of not knowing and understanding technology. And I think we also have to be honest with seniors. And again, in my experience, I remember seniors coming to me and saying, well, you're asking me to use this other channel, but can somebody get my PIN or can somebody use this, right? So I think in the whole education process, we need to really talk about security and what we're doing to make transactions a lot more secure, right? And of course, the benefit, the speed with which you can access, other channels to satisfy those needs, as opposed to coming into a branch, where you have to wait in line, etc.
If I could just add one quick comment, Earl, I thought a great summary and all your points were bang on. Again, in my past experience, and in fact, in the Caribbean region, seen a great pilot that was rolled out, which basically, as you have your lineups in your branches, we had people with roaming tablets who would just talk to the people in line while they're waiting and show them the channels, the services, the capabilities, answer their questions on timing, on security, and we're very successful at migrating and getting people to use the channel. So again, hand-holding I think is a great example, and back to Diego's point of go and talk to that specific older segment and learn what their pain points are and put solutions in place to address them.
One of the other things, Matt, if I just add, one of the things that I remember doing in a past life is that we would go to these particular associations where the seniors were, and actually did formal education pieces to walk it through, answer questions in that environment where they would feel a lot more comfortable, right? And I think there's a lot of things that can be done,
There's one other little point I'd like to make. Traditionally, too, FIs tend to focus in their customer engagement through advertising on product and services, but not showing avenues with which customers can exercise their options. So maybe part of the advertising and promotion program should promote the ease with which, for instance, a senior can sit before a laptop for 15 minutes every month and pay their bills. It will not have any direct revenue driving benefits to the institution, but certainly it will drive those alternative delivery channels more effectively if you keep drumming this into the mindset through an advertising and promotion exercise.
Yeah, that is a good point, Bobby, because we know that in-branch transactions are costly, and if you can redirect and migrate in-branch to other channels, then in essence, what you do through that whole process to free up staff, resources to focus on more sales, customer service oriented activities. So the benefit to the organization is there, in that now they can free up resources to focus on helping customers to become financially better off.
May I chime in here? Something that I have seen work very, very well is making it clearer to seniors and anyone else who's in this situation that going digital and being able to deal with, for example, payments from your government on a rate coming in smoothly into your account, not going through a situation of bringing a check into the branch and going through that process. That being able to pay your bills online and arrange a prepaid schedule, so that you're not worried, am I going to miss something? Am I going to be late? What if I go on vacation? Do my bills still get paid? If all of that is automated and your member can see that it works, once they've gotten comfortable with the idea that that is going to work, that is a huge value add to simply not be worrying about those things. So anyone who has a steady and regular flow of income, whether it's from a government pension or a pension from their workplace, they're in a position to set up their bill payments in such a way that it simply takes away the worry of, am I going to miss something? And that's a real selling feature. And one other thing I'd just like to say about youth leadership, something that our consultancy has seen in parts of the world that has really worked, is to run a contest. Run a contest about for young people, put an age limit on it, and say that this is a contest to do something like make yourself a little video of how I help someone with their digital banking. Give them a prize that's fun and interesting. It doesn't have to be big. Maybe even say that, look, you'll put them on a poster, or you'll run their little video. People who are doing things on TikTok is really interesting because they have to come up with a great idea and keep it tight and in a short period of time. So you could have a competition to do a video of TikTok for helping someone set up their first bank account online. I'm taking a look at some of the other potentials here. I've got a very interesting question about how can you help FIs to take advantage of building relationships with clients who are receiving remittances from abroad. This is complicated. It's complicated, of course, by the whole issue of remittances, by concerns about correspondent banking and de-risking in the Caribbean region in particular, and by the question of, is your institution within a payment system that allows you to directly receive a remittance, or are people getting a remittance to a different financial institution and then bringing that money to your credit union? So I'm going to throw that open for whoever wants to try that.
Okay, Lisa, I'll take a stab at it. Within the Caribbean region, there are a number of, the diaspora is pretty large in other countries, and remittances sometimes come through proper channels, either it's a government pension or young people working or whatever, right? So remittances come back. So you have a firm, secure way of dealing with that, okay? And of course, you can expand relationships there because it might be a husband or a wife, it might be somebody mature who's sending money back to family, and that family is recipient of those funds. You can use that opportunity then to expand to see if you have a relationship with them that could be a cross-sell, new customer acquisition, etc. So that's one aspect can be dealt with. When payments are coming just like that, I mean, from the point from which they're sent, there's usually some verification done in terms of know your customer, integrity, etc. And if the payments are very, very large, significant, as I've had in my past experiences, I don't remember the exact amount, but probably over 50,000 US, you have a requirement to go back and re-verify the source with the sending institution. So there are ways and means of dealing with that. And also through know your customer, the activity that's going to go into the account, what's happening with the account, the source of the funds. You can manage that to make sure that that relationship is one that is secure. In my past experience, we've had a number of loans, et cetera, that were granted, on that basis where we could ascertain the source of the funds. Lots of people sent back money to buy land, to build houses, et cetera. But you have to do your due diligence to understand, manage, and monitor those relationships very, very, very carefully.
If I could just add quickly to Earl's point, I have a bit of a beef with having a lot of data and intelligence and not using it effectively. We have the intelligence already. We know who these customers are. We know these payments, but what do we do with that information? Do we target them specifically, for instance, in a small engagement to determine, what are their short to medium term plans or long term plans? They may be plans of retiring and returning home. How can we work with you in fulfilling those objectives, as opposed to allowing them to happen because we don't see the opportunity for upsell and cross-sell? Well, create the opportunity through a different conversation and determining how we as an organization, as a credit union, can work with you in achieving those objectives and begin to establish a roadmap toward that end. And there's less likelihood of defection to another institution because you're already engaging these clients and you're already showing them your willingness to work with them in achieving those objectives. But use of the data, I guess this is my big beef. The data is there, let's use it, but let's use it effectively.
Let's say, if I could add a couple of things there. That's a great comment, Robert. One of the things that we're also finding is that organizations do have the data, but they're hesitant or they're not applying it to improve the customer experience. So I see that a lot They do, the organizations don't have, they're not willing to talk to the customers, not engaging the customers. There are other organizations that do talk to customers, but then they don't do anything with the data. So it's kind of a waste effort. But from a personal perspective, I would say this is hitting close to home. And here being in Canada, I've seen the evolution of the financial services when sending money to Ecuador or South America. Even today, if you go through the major bank here in Canada, it may take a couple of days, if no more, to get my money transferred to a bank account in Ecuador. However, I found that another bank is, I think, a fintech who can actually do almost immediately. So when I saw that, I had no concerns of leaving my bank to send money through this financial institution, this fintech, money to Ecuador. So the key here, though, is trying to, as Robert was mentioning and Earl, is trying to understand what are the customer expectations, because customer expectations are changing. They are becoming, the voice of the customer is critical to trying to, again, transform your processes, your internal processes, transforming the interface that the users use to execute those transactions. So it is critical, again, is to start with the customer, understand their expectations, understand what's the situation, and then build from that the knowledge, the services that they need to make the experience successful.
That actually ties into one other question that I really wanted to get answered. Is there was a question about pushback from the customer with the amount of focus that there is on moving them towards a digital channel, and I think that you actually just answered that in a lot of ways, Diego, which is it shouldn't be, no one should ever feel forced. No one should ever feel that the thing that made them want to come to your credit union in the first place, that personal touch, the feeling that they're understood, is lost. Instead, what you're trying to get across is this idea is that this is an augmentation. This is a make some of the absolutely sort of operational things easier for your customer. And then make sure that they know that they are always welcome in your branch. If a situation like COVID has happened, they can always pick up a telephone and speak to a real person that they know at their credit union. It's a place where again, the credit union, I think, has the advantage over the larger institutions. Gentlemen, any comment in that area?
Yeah, Alisa, I agree with what you're saying. One of the ways I tend to look at this from a customer perspective is what's the value proposition for the customer? How does that improve my customer experience with the organization? How is it going to make my life a lot easier, right? So the customer satisfaction piece is very, very critical in that whole analysis. And I think if you present on that basis in terms of getting to know the customer, understanding the customer's needs, discovering the customer's needs, having to respond to the customer's needs, exceeding the expectations, and showing appreciation to the customer, it then makes that whole transition, that whole process a lot easier. And then you build a customer for life because you remember, what happened when that account was initially opened or when you approached them. So I think there's a whole process here around customer satisfaction and loyalty that is very important.
That's true. I just want to add one statistic that I found is that, again, through when you're trying to make your organization more customer-centric, sometimes we think of improving just the interface, making it shiny, making it easier, obviously, but we forget about optimizing the business process that is driving that experience. So what we find is that if you're just focusing on, for example, improving some of the user interface, maybe bigger fonts, the flows, trying to optimize them somewhat, you will get improvement in overall customer experience. However, the true benefit of customer design is when you partner with process redesigned. and with the technology. Something that Matt and Jeremy were talking about is not just one pillar that you need to focus on, but it's actually tying all together to actually exploit and provide a higher value proposition to your customers so that they can be successfully at using your product. And so it's very critical not to underestimate the power of transforming the backend processes to support the user experience.
If I may just add one thing to that, and I think that's very, very important. If you just touch on the people side of it and sort of the sales coaching and the engagement that is necessary from the back office people and how they deliver results, how they position results, is very key in that whole customer experience. And those are the kind of things that are going to get a customer for life. Is that, am I wowed? Is the service consistent? Does it meet my expectations? And I think that we also need to look at the coaching side from a sales perspective, from a personal development perspective, to see how best our people are interfacing when presented with these opportunities and can present the best value proposition to prospects, etc.
Thank you very much. We have come up to 11 o'clock, and so many of you have stayed with us. Thank you very much. We will be sending out a package that will have some of the key slides, that will have something that we hadn't discussed, which is here are some key questions that you can ask within your institution in order to start generating the idea of what is your digital business mission. And we are absolutely happy to engage with any of you on specifics of your own credit union or credit union league. What are things that each of you can do? Any of us would be very, very happy to engage with that. And with our package, we will also be sure to send some contact information. If there are other questions, please, again, this whole video is available up on our website at digitalfinancial.ca. It will be up on our YouTube channel, Digital Financial, and on our Facebook. And any questions through there, we will also make every effort to get back to you with something that's useful to you and your credit union. And Denise, thank you so very much. This has been a really great session, and the questions are excellent. They are things that we will keep in mind when we address any of our clients in the region in the future. Thank you ever so much for coming to our event.